Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing, without wasting a second of your time, bada bing, bada boom, we go into the charts on January 1st, 2024 here in Asia. So we are in the new year over here. We're in the future. If you're on the East Coast, you're in the past. It has yet to be Happy New Year for you, but it's all an eternal moment and arbitrary calendar of the Gregorian kind anyway. But let's go ahead and look at how this monthly candle closed first and foremost. So the monthly candle had this little wick beneath that 42,394 area we were talking about, where this monthly support level, it's a daily and monthly level. This is why I put these yellow lines here. They're generally gravitational points that mean something, and so they are the only lines that I do have on my chart, these daily support levels. So that is where we are right now, just below. We closed just below that daily support level, and this 786 of the diagonal pitch fan we've had pricing since last January for over a year now, and possibly coming to the 786 here and starting to make a bounce off that 786 for that double bottom idea we were talking about. What was that idea from yesterday and the day before that's been unchanged? Because we've been wick-whacking around in the zone. It stopped me out in profit with my short. I was up here taking it down, and it came back up and stopped me out in profit. Actually, no, I was here, took it, and at the 236 we started to say it was looking bullish. Off this 236 bounce, we said the 236, watch out for that. That's why we have this circle, that 42,114. So when this got to that level and started to bounce, we were seeing a rounding out of this price action on the live as well. So we had an ambiguity of this crossing down price action of the 15 and the hourly curvature, and we came down and bounced off the hourly, and we're in this ambiguous point. Are they offloading to come down for that double bottom idea or not? That is the question. As we enter the new year, people might buy their positions back, so we'll remove this idea since it did not play out just yet, but it still could be on that merry old path, so we'll leave it there. These are some key levels to look at down here. The 618 at 39K. There's a pool down there. We are looking at some wicks, liquidity pool, 786 level. There's a lot of defense lines to potentially bounce off of. So we're going to look at the liquidity. What is that? Well, high block locks the liquidity into the charts to get burnt to crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. Okay. So as we come down here, we were taking out some of these 100x, these New Year's Eve traders that were entering max leverage at 100x up here into resistance. Not a good look. 57 million, 16 million, 28 million, 21 million, all longing into this resistance point, and they came back promptly liquidating them.
Fatality.
Don't put a limit long above the highs, people. That is where they just scoop up, get the buy side liquidity and come back down. That is where they liquidate shorts and pull back. You want to get your longs down in the stops of the sells like the smart money people do. What do I mean by that? Well, the long positions of larger players are being gotten down here as they stop out all of these longs and induce some shorts and then bounce up into those liquidity getting paid. So when the shorts open to the tune of 275 million down in this support region, that is when you should be looking at a long, not when everyone else, the herd, is going with that long idea. Okay, so we still have a thick band of liquidity induced on these bounces here as we were coming down, the idea of coming lower. This looks like this could be a get people to regret shorting theme. So if it respects this level of this fair value gap and starts to come lower, it could accelerate to our idea at that 41k region. There's a 41,342 wick over here, 137 million that it could come down to. Up above you have 43,062. We have those marked off in the charts as well. 43,062 and 41 down here. Let's go to the higher time frame pools to see what is up and say what's up to the chat. Yo, 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 anyone out there? It is New Year's Eve. I can't expect everyone to be present. I don't have a cult like some people that breathlessly worship every word they say. I don't want that either. The whole fact is be your own guru. So the fact that everyone's out there being their own guru is good for me to feel. So the analysis being on point as an infomercial is all I care about. So this is what we have up here, some liquidity at 44k, larger than what is beneath. They're coming back into some smaller characters as they pull back into those 50x. But overall draw looking to that 44k region on the 7-day. Now if we go to the monthly, looks a little bit different because the pools they're drawing from in time are different. So it looks like even Steven, but there is a thicker pool down at 39.7. this is what we were looking at for that idea. But we're basically in a rock and a hard place on both sides. They had a chance to come up to 45K. They did not take it at 44.3. And that's when we looked to short on that Sunday. And are they going to clear the range here? There is a larger amount of liquidity down that sub 39K region. They could just come and gobble it up down to 39.5, reach into an order block, stop out all of those longs since December 11th, and then make their way to that the 45K region. If we go to the 3-month, the 45K liquidity pales in comparison to what is down below at 33.8, and that whole sub 35K region we were looking at from back here on November. But they left it alone in November, and it's gotten mighty thick. Started out as 15 billion, now up to 45 billion. So 30 billion has been induced since November. Do they come down to that 30 billion in each range, so $100 billion or so? At some point they will. Do they go up first is the question. So coming to that monthly time frame on the higher time frame and going into the math and the momentum, let's go take a look at our indicator. Link in the description for more. MomentumMaster.info. Scroll down to features, toggle everything at your leisure. You can see the schematic. We are looking for a kind of breakdown here for a double bottom event similar to this. Let's go ahead and throw it on so you see what I mean. Let's go to the hourly. Okay. So we're looking at a potential breakdown here. We did reclaim the cloud on the hourly similar to this schematic, and we came up here, but we could be doing something like this and fading at the cloud and coming back down. Now they didn't recover this wick on this 15K time either, and then they surged out. So this, I'm still looking for a recovery of the wick of some kind. You still have some nature down here, which we have yet to recover, down in the 786 region, and a possibility of sweeping the liquidity down here. So we have the trend cloud, the baseline, stochastic array, and more dynamic alerts to your phone. Just read about it whenever you get a chance, if you see it in prominence. So we were looking at the prominence of the 12-hour time frame cross down event as the potential suppression here, and this cloud getting a rejection and coming back down here. Actually, we were shorting it from back here and got stopped out, but we were looking at a rejection of this fair value gap region. They came up into the higher echelons of this candle and then rejected back down off of it. So they're just eating both sides of liquidity at this point. We are flat on the sidelines, just to be clear. Nothing open right now. Stopped in profit, so a win is a win is a win. Could have gotten more, could have gotten less. So they took those out, so we're going to remove those lines. And we're attempting to come back above that 42.335 level on the daily time frame, and the baseline, which was previously crossed down, is attempting to cross up here on the 12-hour. We have a candle above it. Has yet to close. We'll see in the next 10 hours for New York how this candle closes or not. Coming to the higher time frame, looking at the 3-day. The 3-day could not muster the strength. It did close above the 236 though, which is good. And this is what we were talking about in terms of the suppression. We were talking about on December 15th this cross down event of the baseline, and how that is similar to the past, where it gets a cross down and comes down, gets a cross down, fake out, cross up, cross down, and comes down. So these cross down events and cross up events of the baselines on the 3-day are not to be ignored. So looking at this on the 3-day, even if we come up here and reject and do something spectacular, it could be something that gets suppression. Okay, so that is the suppression we're seeing, but it's not accelerating as much as we would have liked to come down to here or here. It's been holding this 236, which is a bullish trend-based fib level. So I keep saying this is a key zone we need to watch out for, that 236 level. Okay, so looking at the 3-day stochastic coming down lower, the Williams possible suppression inbound, money flow coming above the RSI, suggestive of some fatigue to come lower on the 3-day, and coming to the daily. The daily time frame. The daily time frame cloud is what we were looking at here as a potential taper, but we were also seeing this bounce off the cloud. This was what was giving us pause on the short, because we did come above the 236 and hit the cloud. So in terms of shorting into a cloud support idea, we trade with the cloud, not against it generally. So trying to look for a long would be better suitable for this idea, and this is why we're looking for a double bottom event. Ultimately, I'd like to see it double bottom and bounce for one last hurrah. While we are seeing this 3-day cross down event, we proved that it is possible to have a bounce up within that. Okay, so on the daily time frame, the stochastic is oversold, the money flow and the RSI even Steven levels, the Williams getting below that 50, steady suppression, but could suppress it some more if it wants to break down at that 50 level, or it can bounce off that 50 level, similar to what it did here in October. So it doesn't always need to come down to the bottom level, but we're here for it if it does. Either way, we don't have a preference. Okay, so that's the problem when you watch YouTubers who hodl Bitcoin, because they always want to see it go up. Even when they say they don't, their narrative is like, it doesn't look good for Bitcoin. And they say doesn't look good, but what looks good is volatility. Whether it breaks down here or goes up, doesn't really matter. There's no good and bad in trading. This is all inverted. It doesn't really matter whether it's this way or that way, as long as you catch the right thing as it occurs. But the hodler's perspective will get you, wanting it to go up, even if you don't admit it. So 22-hour time frame is here, getting this cross up event of the baseline potential. You got 20 hours for this candle to close. A lot could happen in that time, but flashing the signal nonetheless. Pardon me. If you go to the 12-hour time frame, also looking to take off here with the reset here. Williams at an oversold level, could go a little bit lower. If we go to that 6, still ambiguous 6-hour, getting a little bit more fatigued, having the money flow coming above the RSI here, and you're beating your head against that 6-hour cloud resistance level. Got rejected off the cloud, came back down on the outskirts of the cloud. The cloud is starting to shift though ever so slightly here. If you look at the 6-hour shift, it's kind of insinuating that we could possibly break through it at some point. And if we go to the 4 hour, also you got that cross up event of the 6 hour here, since our banging up against that 236 level. So banging up against that 236 level of the bullish trend-based fib, suggestive of trying to keep that as a support structure. Coming to the 4 hour cloud, also proving to be difficult to get above. At this time, you are getting some thinning of the cloud and this great big red vector candle. The money flow coming beneath the RSI, suggestive of a push up to the RSI. This gap insinuates that there is a money flow burst up into that RSI. So this coming below suggests there's a lot of shorting going on, and they can't get it to go lower. Or people just selling off for the new year and they're looking to reaccumulate back. Do they purge it and take it down so they can liquidate the longs one last time and then get up in that order block idea at the adaptive on these wicks or not? Or does it just take off here? Let's go into the hourly. Hourly closed out with a near recovery of this vector to the downside. You had a blue vector, which is the stopping volume here. And then we reclaimed the cloud on the hourly, and we are hanging out above the hourly cloud. This was the curvature we were talking about yesterday. Whoa. Yesterday we didn't change the angle of this. We were talking about this curvature, and this curvature kind of insinuated that it wanted to find support on the hourly time frame. So we weren't necessarily confident in the short when we saw this curvature and this ambiguity. So we drew this curvature before it did this move. We were back here. So we were back here and we were talking about the possibility of this cloud curvature. And if it gets support on the 236, we could see this cloud shift. But we were also seeing this 15-minute, this cloud was curving to the downside. So we were still satisfied to remain in our short idea from this time. And then when it got support on the 236, that's when we got stopped out in profit here. We moved our stop loss down and got kicked out in profit as it came up here. Would have been good to trim under that 236 level, and this is where you got your hourly time frame coming beneath that 236, kiss off the cloud. That would have been a perfect entry for the long idea. Flipping the cloud and turning it into support at the 236 level. Confluence on confluence is a good thing, but ultimately came down to the entry and stopped out. So it is wick whacking both sides right now, and yeah, coming down to that 50x pool. So coming back to the liquidity to wrap it up in a nutshell, let's go see what is going on. So got a few sparse pools, but overall the liquidity is dry as a bone. These small little $17 million over leveraged characters that they could basically go wick whack both sides on. So they are going consolidation mode to hit both pools that dare enter on this New Year low liquidity day. I believe it is also a national holiday, so we don't have markets open today either. So it's going to be a 3-day weekend type deal. And yeah, looking down here, we do have those sparse longs to come back to into the bottom here. So there is a narrative to do that. If they want to finish off this 43K character, they had the opportunity to do so here at 42,913. Why did they leave that guy alone right now? I have no idea, but for the most part, it looks like they are getting fatigued to come down into these 50x longs some more. If it breaks down here, let's get out of the replay mode. If it breaks down here on the 4 hour, it's giving the appearance of strength but not making it above the cloud right now. So is this attempting to give an illusion of strength to stop out shorts and then come back down for that recovery of the wick? Is our ideas from before sound or not? Right now there's a lot of ambiguity in terms of the clouds here and the baselines. So you have the 4 hour baseline wanting to go alongside the 6 hour also crossed up. Generally, when it crosses up, though, it does create a double bottom and holds with the buyback wick and holds that baseline for that upside play. So let's go back to a time where it actually played out from September. Let's go back to September. It even worked in October too, but this is really where I like to see it. So you get this down in the dumps here. This was September 11th, or no, that was October. So let's just do October then, because the September rocket had already played out. We were already in a premium range, but we kept going higher. So this was very similar, where you had the cloud above you and not reclaiming the cloud on that time frame. So the cloud was above you. All right, so you basically go down into these time frames. You had the 4 hour hitting up against the cloud here. Whoa, I didn't mean to jump forward that fast. But basically, you reclaimed an hour. We were about here. It's about here where it starts to meander around and give insinuations to both the sides. And then we were reclaiming the cloud, and then we basically kept the cloud and the super trend on our side and kept going on this hourly. So this one, you did come back for the wick for the most part. On this current one we're at right now, that V-shaped was a little bit too extreme for my liking. So I'm just wondering if that is going to be recovered or not. Do we come back and recover this little bit of happiness? Even a little bit halfway into it even would be an interesting amount to look at here. Just coming back into even like 50% to that 41,400 level. But as of this moment in time, we are holding the hourly cloud, and this super trend is intact. So we are in a bullish state as of this moment. So me waiting and wanting to be in a long, I can be patient. If it does a liquidity grab and fakes out these guys, I can reassess down here or here at some key level. And that's why you have key levels and confluence zones, which you're looking at for your ideas of support and resistance. As it stands right now, we are taking back that 42,114,236 level. This bounce down into that level would have been a good idea if I were awake. It was 5 a.m. my time. Here coming down into support. Actually, that was 7 a.m., but I was fast asleep. So this 7 a.m. entry holding the cloud coming back down pre-market. What is it doing? It looks like it's just a low liquidity day. Got a lot of ambiguous signals. We have yet to reclaim the 4-hour cloud. The one bullish thing of this is the thinning and curvature that we were saying was happening here, and this cross up event of the 4-hour. 4-hour money flow also being beneath the RSI like this, with this disparity, suggestive of upside play. So do we get some of this upside reclaiming the cloud and coming back down and coming up to here or not? If I had to make a call one way or the other, it's very hard to do right now. I'm not really keen for this, but I would trade with the cloud, and the cloud on the hourly is saying upside alongside those cross-up events and that disparity on the 4-hour. So I would say that we are going up further as the new year approaches, and that new flip over to the new year, the people buy back their amount on New Year's Day, possibly. And so we could possibly be coming up into this cloud, flip the cloud, and then come back, retest, and then we are gone to that 45k region perhaps, or 44k, ultimately looking at the 3-day as a warning sign for higher time frame narratives. And that is my story, and I'm sticking to it. Let's go into the higher time frame, or the other markets. Bitcoin dominance getting a little bit of a burst as total kind of comes and breaks down a little bit, getting some rejection here on some levels. Couldn't make it above this bearish 3236, so we're still ultimately looking for things to break down a little bit on total 3. The dominance coming up, still in the path we were looking. USDT dominance playing games. We were talking about it being an inflection point either way. Coming to this cloud, it came to this cloud on the 6-hour, and the 6-hour cloud was basically starting to curve up here, giving the idea of knocking people into USDT each time it bounces off of this cloud. But as it stands right now, you are getting in a consolidation manner, so it could come lower or higher. We're still looking at the idea of coming down one last hurrah to that 45k would take you down into these regions, but that is a ways away on the USDT dominance. Coming to the 12-hour cloud, not showing signs of curving just yet. That's what this little curvature was. You are rejecting off of the cloud, so as money comes in, that meets the narrative of us saying this going up. So if this comes down here and accelerates beneath the cloud, then you see Bitcoin going up more, with the dominance going up and Bitcoin dominance and the USDT dominance going down, suggestive of total. Total is holding this 236, not respecting the 236 of the bearish nature, which means this bearish path is negated for the total market cap here. As it holds this 236, this is stronger than total 3, although total 3 is on a different path in terms of holding this daily support line. We did come a little bit lower, hit into the 1 level of this 236 level. We're going to remove the idea so we don't get biased and see. It did respect it in terms of coming down lower, but we did reclaim this daily support. So if this does come back up as a buyback idea, then we could be seeing BTC going up here. So the narrative, if I had to call it, would be to the upside. 4-hour money flow disparity suggestive of that. So coming back above this cloud with conviction and possibly coming to that 43.4 draw. We have a $275 million short pool up at 43.062, and yeah, clearing this range. Looks like it's going to do that for the New Year's holiday. And we're here for it. So that is my story, and I'm sticking to it. What's up, Effin' Book Clue? Thank you for stopping on in. If you have anything you want to look at, now's the time. So seeing this 4-hour cross-up event and the reclaiming of the cloud, you're also getting the money flow disparity on total, suggestive of this needs to make it clearly above this cloud for the conviction play. Otherwise, it's not genuine. So you have a few seconds more, and then I will bid you adieu. Yeah, this coming back off of this, holding the super trend cross-up event of the 4 and the 6. So you could be getting this 6-hour cascade. It would need to do something to get above the 6-hour cloud and then reclaim this 6-hour cloud and 4-hour cloud as support for me to find it genuine. But we're coming back above the cloud now, as we suspected, with this thinning of the cloud. This was starting before it started to move. So we were saying this, minutes before it was happening. If you go down into the 1 minute time frame, you would see this sell-off coming back, hitting the cloud, reclaiming the cloud, and you can play this even on multiple time frames. It's fractal in nature, and you could play this on the 1 minute. And we're seeing a breakout here above the cloud. Volume coming in, conviction. Let's go ahead and delete this circle. All right, let's go see if you have anything to request. All right, guys. Well, it's a happy new year. I got to spend time with the family. We have a nice New Year's meal prepared by my wife. In Japan, they do something called osechi ryori. Osechi ryori. Here. This is the New Year's food for Japan. They make a big box of different things that have different meanings. And these meanings all have different things about longevity, like black beans and all this other stuff. It's quite nice. Takes a long time to prepare. So she was doing it all day yesterday, making this nice meal for New Year's time in Japan. Some of it tastes questionable, but it's traditional, and it's meant to last the holiday because they don't have stores open for multiple days, not just New Year's Day. So it's meant to last like 2-3 days and not spoil. So before refrigerators, this was what the food they ate that kept the longest. So that is a little bit of my life right now, and it's a happy new year, so let's go enjoy it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll